Okay, if you can head down to row 197, we're going to do something called a common size income statement. And basically what we're doing is we're looking at everything on the income statement relative to revenues, and we're going to express it as a percentage. So what we need to do is calculate one formula very carefully, make sure we got it right, and then we can just copy this down. Okay, so here we go. What we're going to do is we're going to go put a plus or an equal sign. I'm going to do a plus sign, and I'm going right up to the top. Okay, and I'm going to take the first line item here. Now, you'll notice that the common size income statement is laid out exactly like the income statement so that we can just copy a formula down. So we're going to have C9, and we're going to divide it by total net revenue. Now, I have to go all the way back up. Unfortunately, but we need to find row C12. Now, we need to lock this row so that it does its absolute reference. We want to put a dollar sign in front of the 12, not in front of the C. If we put a dollar in front of the C and the 12, it would only refer to that cell. We want us to be able to move columns, just we want to never move rows. So what you can do is you can just enter, let me get in that cell. There's the 84.7. What I'm going to do before I copy it is I'm going to just put a dollar sign in there. Now, there's a shortcut in Excel to do that. It's F4. So I'm going to do this again. Go in, select what you want to lock down. If I hit F4 once, both the row and column are locked. If I hit it again, just the row is locked, and that's what I want. Now I can use something called paste special. It's one of my favorite functions because I don't want to ruin my formatting. I just want to copy the formula, and I want to copy it down. So to show you what I mean, I do Control C for copy, and then I highlight the area I want to copy to, and I go Alt E S. And when you do Alt E S, you can see something called paste special comes up, and then I'm going to go and choose the formulas. I don't want the format, I don't want the value, I want the formula. And there you have it. Now, what I can do is then, if I sum this up, it has to equal 100% because this is our reference line. Now what we can do, though, is look at, so we're basically saying company-operated stores are between 84 and 81% of our sales. Do you see the power of this ratio? We can look at all our expense lines as percentage of sales. So how much of our revenue gets caught up in product and distribution costs? What percentage in store operating expenses? So I'm going to do the same thing. Control C with that first cell. I'm going to highlight this whole area and go Alt E S, and I'm doing formulas again. I'm going to sum up my total operating expenses. And again, how you can read this is 84 cents on the dollar, roughly 84 point, well, it's very close, between 84 and 86, goes to operating expenses. Now, we can then just do it again. Control C, Alt E S F. We then sum that up by, just as a heads up, we need to take our operating net revenue plus our operating expenses plus these two line items. So it's C206 plus C214 plus C216 plus C217. Copy that across. Okay, we're almost there. We're just going to do it a couple more times. I'm going to go Control C, Alt E S, formulas, and then we're going to go operating income plus these three items. Copy that across. We have our income tax expense, so we're going to go Control C, highlight the area, Alt E S, formulas, add those together. And finally, we have one more, Control C, Alt E S, formulas, and we add those two up. Now we have a check here, and the check is we've actually calculated this. It was the first ratio we calculated, so just let's make sure it matches, 14.5 to 11.5. So that's the ratio. So we've got it done right. But now the power of a common size income statement is hopefully now readily available. We can see that company operated stores are by far the largest component of revenues. We can see that product and distribution costs are 30% of revenues, but even larger are store operating expenses. But maybe that's not so much a surprise since that's the business they're in. And finally, what's left for shareholders at the end of the day is in 2023, the most recent year, 11.5 cents on the dollar. That's a common size income statement. See you in the next lesson. I wanted to finish this course with one lesson on what an annual report looks like outside of the US, where it isn't prescribed like the SEC prescribes the 10K. Now, for the most part, you're going to see almost the same information, but it's going to be laid out slightly differently. You're still going to have financial statements. You're still going to have the notes to the financial statements. You're still going to have a large section called MD&A, Management Discussion and Analysis. But I just wanted to point out a few differences. So if you want to download this and watch it with me, I encourage you to do that. Or download it and just explore the annual report on your own after this course, just to notice some of the differences, but there are a lot of similarities. So the first thing you probably notice is an annual report is a lot more colorful. You're going to see a lot more photos, infographics, and so on, because we're not having to follow a strict prescribed format. The company I've chosen is International Airlines Group. One of the airlines it owns is British Airways, amongst a few others, and I'll show you that in a second. Now, one of the things that's also different in an annual report, other than the colorfulness of it and the infographics, is you'll typically, and I'll just go to page 8 of this PDF, Control-Shift-N, go to page 8. In this case, the page numbers that are printed on the page actually match the PDF, so we don't have to worry about that difference. You often will get the annual report starting with a letter from the chairman of the board of the company, followed by a letter from the CEO. And so we have the chairman here on page 8, and if I go Control-Shift-N and just go to page 10, we get the letter from the CEO. And then after that, we get a lot of the MD&A, the management discussion and analysis, all those things that you may want to hunt for, understanding the business and so on, you're going to find there. So for example, I'm just going to go to Control-Shift-N page 16, and you can see what IAG actually owns: Iberia, British Airways, Aer Lingus, Level, and Vueling, as well as a few others. And so you're going to see segmental information based on these airlines, similar to what we saw with geographic segmentation for Starbucks. So again, I don't want to stress that how different they are, but there are small differences, and sometimes you just have to look in different places. Now, one of the things about annual reports in other jurisdictions is typically they provide a lot more disclosure around executive compensation than a 10K does. The reason for that is that in the US, there's a separate filing called a proxy statement that companies must do where they disclose that executive compensation. And it's why we don't see as much in the 10K. But here we can find a lot of executive compensation. So if you want to follow me, if I go Control-Shift-N and go 178, you can see remuneration, and it starts with the CEO, base salary, taxable benefits, and pension-related benefits. All that is captured in the annual report itself. We don't need to go to a separate proxy statement. Okay, now let's actually go to the financial statements. I'm going to go Control-Shift-N, and I'm going to go 208. So here we are with the financial statements. From here on, we pass the MD&A, we just have the financial statements and then the notes to the financial statements. And I'm just going to focus on the core financial statements for now and just highlight a few differences that you're going to typically see. So we have our consolidated income statement. That's probably no surprise there. That's probably what you expect. We have our consolidated balance sheet. Now, one of the things you will notice about the consolidated balance sheet is you can still see total assets and total equity and liabilities, but the layout is different. All the information is there. It's just a slight layout difference. So for IAG, they start with the least liquid assets, which is non-current assets, and go to the most liquid assets. So you can see cash, instead of being first, is last, and that gives us total assets. You also see an inversion on the other side. So we start with shareholders' equity, and I'll scroll up just so you can see this more. Whoops, sorry. Let me just, I'm going to enlarge it and let me see. I'll just scroll up. Here we go. Okay, so what we see, and I'm going to, oops, it keeps wanting to go over. I'll scroll. You start with shareholders' equity, then we go to non-current liabilities, and we finish with current liabilities. And I know the bottom of the page is cut off, but you get the gist of this. Let me just go back out a bit so we can see. Okay. Now, another thing you're going to notice is often, we didn't see this with Starbucks, but often the note related to the item is directly placed on the balance sheet, which makes it super easy to find additional information. So if we want a property, plant, and equipment, we know we just can find that in note 13. So just another thing, I actually love this layout with the notes there because then I don't have to hunt and find them. I can go to the direct note. A final thing I'll flag is, let me go back to the income statement. The U.S. SEC requires 3 years of income statement and 3 years of cash flow, and then only 2 years of the balance sheet. That's quite rare to the U.S. In almost all other jurisdictions, it's 2 years for the balance sheet, the cash flow, and the income statement. So we see only 2 years here. If I go just 2 years on the balance sheet, that's the same as the U.S. But here's our cash flow statement, and you can see we only have 2 years there. Just a small difference as well. In the U.S., we always start with net income, but you can see here in this instance, we're actually starting with operating profit. Ultimately, we get our cash flows from operating activities. Then it goes to our investing activities and so on. But again, just a small nuance of difference. I hope this was helpful, and I really encourage you to spend a bit more time exploring IAG's financial statements. Bye for now. Thank you for joining me on this course about reading financial statements. We actually went into real company data and analyzed the financial statements. We explored the MD&A as well as the notes, the footnotes to the financial statements. I'm hoping you feel a lot more comfortable now reading and interpreting a set of financial statements. Reading financial statements is critical for almost any role in finance and banking, and you'll end up using it in almost every CFI course here. Thank you for taking part. See you soon, and good luck with reading and analyzing financial statements.